What the micro-private equity sector can learn from the recruitment industry. The micro-private equity (PE) sector, focused on acquiring and growing small businesses typically generating under £5 million in revenue, has seen a surge of interest in recent years. This interest is driven by the proliferation of search funds, increased access to financing, and the relative affordability of small business acquisitions compared to traditional private equity targets. However, despite the enthusiasm surrounding micro-PE, the sector still grapples with numerous challenges such as deal sourcing, due diligence, operational improvements, and post-acquisition integration. Conversely, the recruitment industry, an established and mature sector, has developed best practices, scalable systems, and highly effective human capital strategies. Recruitment firms thrive in highly competitive environments, deal with large volumes of candidates and clients, and operate under intense time constraints. Their proficiency in sales, client management, data utilization, and scalability makes them an ideal source of insight for the micro-PE space. This essay explores what the micro-private equity sector can learn from the recruitment industry, particularly in areas such as deal sourcing, relationship management, data and systems utilization, talent acquisition, and scalability. Drawing parallels between the two sectors illuminates actionable strategies micro-PE firms can adopt to improve efficiency, growth, and long-term success. 1. Deal sourcing and pipeline management. In micro-private equity, sourcing quality deals remains a perennial challenge. Unlike large-scale buyouts where investment banks provide a steady flow of opportunities, micro-PE firms often depend on a fragmented network of brokers, cold outreach, and word-of-mouth referrals. This decentralized system can be time-consuming and unreliable. Recruitment firms, however, excel at building and managing pipelines. They employ sophisticated candidate tracking systems, ATS, to ensure they are continually engaging with new and existing talent. Recruiters understand the value of keeping a warm pipeline and actively nurture relationships even before a specific job order arises. Micro-PE firms can emulate this by adopting CRM systems tailored to deal sourcing and relationship nurturing. Platforms like HubSpot, Pipedrive, or bespoke solutions can track interactions with potential sellers, brokers, and advisors. Additionally, recruitment consultants are trained in proactive headhunting techniques. They do not wait for candidates to come to them, instead, they actively seek out individuals who are not publicly advertising their availability. Similarly, micro-PE professionals should hone their skills in identifying and approaching potential acquisition targets that are not formally on the market. Implementing outreach campaigns, LinkedIn targeting, and industry-specific research can significantly improve deal origination. 2. Relationship management and human capital strategy. The recruitment industry is fundamentally about people. Recruiters cultivate relationships with clients and candidates, often maintaining them over many years. Trust, communication, and follow-up are central tenets of their success. Micro-PE firms, on the other hand, often focus heavily on the financial and operational aspects of a deal, sometimes at the expense of relationship building. By adopting the recruitment industry's emphasis on long-term relationship management, micro-PE firms can create more fruitful dialogues with business owners. Many potential sellers are emotionally attached to their businesses and require reassurance that their legacy will be preserved. Relationship-centric communication strategies can build the trust needed to close deals and ensure smoother transitions post-acquisition. Furthermore, post-acquisition success often hinges on effective leadership transitions and employee retention. Here too, recruitment best practices offer valuable lessons. Onboarding, succession planning, and cultural alignment are all areas where recruitment firms excel. Micro-pay firms should integrate human capital considerations into their investment thesis and due diligence process. Investing in leadership development and change management ensures better outcomes and less disruption. 3. Data utilization and technology systems. Recruitment companies are increasingly data-driven. From tracking candidate response rates to analyzing time-to-hire metrics, the use of data has become a cornerstone of decision-making. The use of customer relationship management (CRM) systems, applicant tracking systems (ATS), and marketing automation tools enables recruiters to monitor performance, optimize processes, and forecast revenue. Micro-pay firms can benefit from a similar approach. Often, smaller pay firms rely on spreadsheets and manual tracking, which can hinder scalability. Implementing centralized data systems enables better tracking of KPIs across portfolio companies, more accurate forecasting, and enhanced investor reporting. Additionally, integrating business intelligence tools can provide real-time insights into performance trends, helping to identify underperformance before it becomes critical. For example, a micro-pay firm might track deal flow conversion rates, time to LOI, letter of intent, diligence duration, and post-close growth metrics using a dashboard. This mirrors how recruitment agencies track placement ratios, fill times, and client satisfaction scores. By operationalizing data, micro-pay firms can enhance transparency, accountability, and performance across their operations. 4. Marketing and brand positioning. Recruitment firms invest heavily in brand positioning. They understand that both clients and candidates are evaluating them constantly. This has led to an emphasis on professional branding, thought leadership, social media engagement, and content marketing. They position themselves as industry experts and valuable partners. In contrast, many micro-pay firms maintain a low profile, fearing that publicity may deter potential sellers or attract competition. However, this can be counterproductive. Building a strong digital presence helps establish credibility, especially among owners of small businesses who may be skeptical of financial buyers. By investing in content marketing, micro-pay firms can showcase their expertise, success stories, and commitment to business stewardship. Regular blog posts, case studies, podcasts, and social media updates can humanize the firm and make it more approachable. Recruitment agencies often use these tools to demonstrate market knowledge and industry involvement, a strategy that micro-pay firms would do well to replicate. 5. Talent acquisition and internal hiring. Recruitment firms are obviously adept at identifying, attracting, and retaining top talent. It is their core business. They understand the importance of cultural fit, skills assessment, and performance management. Micro-pay firms, particularly smaller ones, often struggle to scale due to talent limitations. Learning from recruitment, micro-pay firms should professionalize their hiring processes. This includes creating clear job descriptions, using structured interviews, implementing candidate scoring systems, and investing in onboarding and training. Hiring junior associates, analysts, and operations staff can help spread the workload and enable the firm to evaluate more deals and manage more portfolio companies effectively. Moreover, when it comes to staffing portfolio companies, recruitment firms' experience is again relevant. They often provide interim leadership, executive search, and volume hiring solutions, skills that micro-pay firms can leverage directly or replicate in-house. 6. Scalability and process standardization. Recruitment firms operate in a highly scalable environment. They develop playbooks for every aspect of the business, from sourcing candidates to client acquisition, job order fulfillment, and performance monitoring. These processes enable rapid expansion without a corresponding increase in operational chaos. Micropay, by contrast, is often artisanal. Each deal is approached uniquely, leading to inefficiencies and slow growth. By standardizing elements such as deal evaluation criteria, diligence checklists, integration playbooks, and reporting templates, micropay firms can improve consistency and reduce reliance on key individuals. Furthermore, recruitment firms often franchise or open multiple offices using the same operational model. Micropay firms could explore similar growth models, whether through regional partnerships, franchise-style operating partners, or remote teams. This shift from bespoke to systematic operations underpins scalability and long-term viability. 7. Client service and retention. In recruitment, client retention is essential. Agencies invest in account management teams, regular check-ins, performance reviews, and client feedback loops. The emphasis on service excellence ensures repeat business and referrals. Micropay firms, especially those aiming for long-term hold strategies, should adopt a similar mindset toward their portfolio companies. Rather than treating businesses purely as assets, they should view them as clients. Regular support, open communication, and strategic input build trust and foster sustainable growth. In this context, the recruitment industry's dedication to customer service can inform how micropay firms structure their post-acquisition teams and support functions. Tools such as Net Promoter Scores, NPS, service level agreements, SLAs, and stakeholder feedback mechanisms can drive continual improvement. Conclusion. The recruitment industry, though markedly different in output and function, offers a wealth of lessons for the micro-private equity sector. From data-driven decision-making and sophisticated pipeline management to talent acquisition and scalable operations, recruitment firms exemplify best practices in business execution. For micropay firms seeking to improve their sourcing efficiency, deal conversion, operational management, and long-term performance, these insights are not only valuable but essential. By looking beyond traditional financial models and embracing the people-first, process-driven ethos of recruitment, the micropay space can evolve into a more robust, efficient, and scalable ecosystem. In doing so, micro-private equity practitioners will not only enhance returns for investors but also uphold and enrich the legacies of the small businesses they acquire, an outcome that benefits all stakeholders.